How you doing, team? Welcome to today's live. Diego's going to be joining us shortly. Not sure. I think he's having a few technical issues at the moment, so I'm just gonna get stuck into some analysis. Hope you're all well. As always, those of you who are watching live, any questions you have throughout the stream, just make sure you jump in the chat. Ask any questions, say hello, and then we can obviously answer those questions live for you. It was a good week last week. Did about 5% on the accounts, which was fantastic. Really happy with that. So I'm going to talk you through a couple of the trades that we took and kind of what I'm looking at over the next week, really, because again, there's loads of opportunity. We've got some real good moves on the dollar. I've been playing around with gold a little bit more than I have done previously. I've always been a little bit nervous about gold. Not sure why. I think I've seen a big move, and the long story short, I haven't done the testing that I needed to on it. But we're playing around with it a little bit more, and I'm getting some really good results. I've also I did a webinar with my students yesterday. So for those of you who don't follow me already, if you jump onto my YouTube channel, which is the Strong Money Forex YouTube channel, jump onto there. And there's a webinar that could go live in about 25 minutes. So I recommend going and watch it because we came up with this really cool, really simple little daily sweep strategy. It's just a kind of an in and out strategy. When we were playing around with it live, we got about 90% wins, which I know may not be sustainable long term, but it's a short target. So you're getting into the marketplace and you're jumping out about 1.3 R. The aim is obviously to get kind of a 60, 70, 80% strike rate with such a small target. And yeah, so far so good. So I'm doing a little bit of testing on that. I'll talk you through that today. And then the topic for the day today, we're going to be talking about kind of the best risk management plans to pass your prop firm challenges, which I think a really important topic. I think we're so often misled by how the social media world is. Most of the traders that you're following on social media are traders that probably had a lot of experience. But there's two really, isn't there? There's traders that don't know what they're doing and are lying about their results, which I think is a majority, I'd probably say. And there's other traders that do know what they're doing and are really experienced. And so therefore, they're able to get these really kind of massive wins. And with a lot of trading as well, people will often, only show their wins. Something that, from just talking from personal experience, I get a lot more interaction on the posts that I post if it's a winning trade than it is a losing trade. I try and be really kind of open and transparent. I have a Telegram group which I post all my trades into for free, which again, you're welcome to join if you want to. The link's in my Instagram bio. But yeah, so I try and kind of post my wins and my losses. So naturally, you get more traction and more reach and more engagement if you are, if you're posting wins. And so I think you've got to be really careful what you see on social media. One of the things that I always teach my students to do is to just make sure that you are doing the basics first. Make sure you're getting into trades in the right way, following mechanical rules, following your strategy. And then once you've done that, just aim for short targets initially, because going for 1 R or going for 2 R is a lot easier than shooting for 5 or 10 R. And if you want to trade like that, where you go for 5 to 10 R, then the opportunity is there in the future to grow your strategy like that. In the early days, I highly recommend you mastering the basics. And I always use the analogy as if someone is learning to play golf. You're not going to go to the most expensive golf course with the most expensive golf clubs and try and play an 18 hole. Okay, you're going to go down the driving range and you're going to try and hit the ball. You're going to try and hit the ball straight, and you're going to perfect your swing and all those other things. And the same sort of principles should apply in your trading as well. So I want to talk you through a couple of trades that we took last week. I'm just going to jump onto the chart, so just bear with me and talk through. Yeah, and I'll just kind of talk you through, so the trades we took last week. So Euro USD, let's ignore all this stuff on today. Euro USD, we had a really nice kind of week last week. So where were we? Wednesday, Monday. Okay, so Monday. So Just pop a line there just so we know where we are. Okay, so the week started like this, and we had some quite nice movement on Monday. So this contract change, Mondays have been really, really good. I mean, look at what we've done today on Monday. We took a little trade here, that one. We took another slightly larger trade here, that one. We took a reversal trade here, that one. There's been lots of really good opportunities on Mondays. And Mondays historically is a day that I've always kind of missed out from my trading. So it's definitely one that I recommend you play around with a little bit more if you can. Diego, you're here. Welcome, dude.
Yes, how you doing, Jet?
Good man, good to see you.
Sweet.
So yeah, so
nice.
there's a bit of an echo, isn't there?
Sounds alright on my end.
Are you using your mic like normal? I'm hearing you back. I'm not sure.
Yeah, I'm using my normal
Really?
default microphone voice AI audio.
I don't know whether it might get annoying if I do this again. I can hear myself back in line.
How about now?
Yeah, that's better. Yeah.
Okay. I was using the AI one for some reason.
Okay, fine. So Monday, really good day. Very clearance of liquidity. Asia swept that liquidity to the left. Nice little breakdown here, and loads of opportunity to get in here. So the way that I'm looking for trades, I'm looking for impulse imbalances to come into the marketplace. So when I see these impulses, especially if they take out liquidity points like that to the left, what I like to do then is mark on an imbalance or fair value gap, call it that, and then enter off the back of that. Ideally in these setups, we're looking for a manipulation of these kind of internal levels. So what I would call an MSU, a manipulation setup, you're looking for that manipulation there, and if that then tags into those imbalances, then you get yourself into these really nice trades, which if you got into that one and held all the way down, level 8R trade for the day. And you can see there was another setup there as well. So last Monday was really, really profitable today. We then started getting a little bit more confusing kind of throughout the week. So if we just jump up a time frame and look back here, what happened on Tuesday is we had this little tag down, and it's not any particular, not what we class as a key liquidity area, but you can see it swept that liquidity, created some really nice bullish structure, and then for the rest of the week it just kind of reversed up. So I can't remember off the top of my head, I don't think I got into much on Tuesday. No, I don't think I did. But then for the rest of the week I was pretty bullish. So I was waiting for things like the Asia sweep to happen, which we've got here, and again an impulse away from there, come back, retest, and then buy from there. So it was where were we? Sorry, we're back here, weren't we? So yeah, that was the liquidity raid. We then had this nice little breaker structure up here, which was lovely, and that kind of set the tone then for the rest of the week, because what I'm looking for ultimately is I'm looking for that classic kind of accumulation, then I'm looking for a manipulation. In the distribution, it wasn't particularly great this week. It stayed within range, but that was our distribution phase of the week. It was much cleaner on gold last week, which is personally why I had a better week on gold. But when you have these first two parts, it does give you a bit of an indication. Although price didn't take us all the way up here, which we would have loved it to do and would normally expect it to do. What we did have a bullish momentum for the rest of the week, which allowed us to get into trades like this. Nice easy stop, running that to the high and coming out of the marketplace. So getting in and out of the marketplace nice and quickly is the way I like to play it. I'm pretty happy if I get like 1.5 or 2R out of the marketplace. I'm pretty happy with my win rate. I mean, just looking at today as an example, okay, we had the Asia trade. I didn't actually take that one because that was at like 3 in the morning, okay, but it was a valid trade for me. It's not one that I took. It's been drawn into the marketplace for my students primarily. And then once I started seeing this breakdown like this, I got into this trade. I came out around here at the bottom about 1.3. Then I had the reversal, the opposite. So one of the things I've been playing around with lately is whenever you see a daily level rejected on the 5-minute time frame, so that's the previous day from Thursday, the 25th of July. Once you get a nice rejection on the 5-minute time frame, you can jump into that and you can use, one of these engulfing type patterns like that, and set a 1.3 target. And almost every single time, as long as that daily level has clearly rejected, almost every single time, and I did this on my webinar last night live, almost every single time you're getting that rejection out. And you can get out 1.3. This one would have run all the way to kind of 2.3R. For me, I like to get in and out of these trades because it is just literally a daily sweep and a reversal. Whereas sometimes you might look at that and then expect it to go long, wait for the retest, expect it to go long, and it doesn't. This kind of risk entry is a really simple entry. As long as you've got a short target, you can get in and out of them really, really quickly. You compound that, you do that 3 or 4 times a week. You're doing about 5 hours a week, 5% a week. On $1 million account, if you build your capital up that big, you're making all the money that you need. So these big wins, they're really unnecessary. You don't need to chase them. Gold, as you can see, was much better. I have cleared my charts now for the week because it's the start of the week now, but it was a really nice setup. I didn't get this sell, sadly. For me, it didn't give me the setup that I was looking for, but we had a really beautiful week. So that was our Monday accumulation. We then had our Tuesday here, our manipulation, and then the rest of the week was our distribution. So beautiful week on gold, played out perfectly, gave us everything that we needed, and I caught gold pretty well. So I think I caught the sell on gold here, which was this one. Again, nice simple entry, not overcomplicating anything. I'm just looking for, liquidity raid, and then I'm looking to take out some liquidity to the left. I caught a buy on the Tuesday, which was off the back of here. And again, in and out of the marketplace nice and quickly, take my 1.3, take my 1.5. This one, I think I held a little bit longer. I got about 2 hours out of this one. Didn't catch this sell. For me, it just wasn't something, there wasn't a setup there. There wasn't a key liquidity point there. It was just one of those kind of moves that sometimes you will just miss them. But then I caught this sell here. And we caught another 2 hours out of that, and it was a really good day. I did try and catch a sell on Friday around here, which didn't work out, as you can see. I think I got into the marketplace about here after news, and that failed. But all in all, we did about 5% last week, which is better than expected. My target for the week is 3%. That's what I'm always aiming for. I'm aiming for 3% per week, and if I can do 3% per week, then then I'm happy. I don't really need anything else. So good week, pretty happy with that, and on to the next. We started off well already. I'm 2% up the week already, Diego.
I love that. Did you manage to sort your Traders Connect? Yeah,
not yet. I use social trader tools, and I'll be honest, I saw a promotion from another prop firm that we won't mention on the CTI podcast for the obvious reasons, that they don't use MT4, MT5, and so I was looking at it thinking, do you know what, I'll play around with that, see at that sort of cost. And they use C-Trade and Meta Trade or something like that, and that's how I found them. But you use them, do you?
Yeah, I've been using them for a while, ever since it was the circus show with all the prop firms dropping in and out like dominoes with MT4, MT5 and all the licenses. I had to immediately look elsewhere. It took me a whole week to do my research and just disconnect accounts and then just wait for everything to sort of stay trade that week. But now I've been using Traders Connect ever since, to be fair.
Nice.
It's a little bit better than social trader tools, but I think the big difference is obviously when you see trader and DX.
How many accounts do you trade with? Do you have quite a few? I've only got 2 or 3. I've got 3 at the moment, but how many accounts do you trade with?
I've got 8, but I've got 3 master accounts, and on the master accounts, I diversify the risk with different entry models. I've got conservative, aggressive, and one that's a bit of a hybrid, borderline aggressive. So that's I kind of just mix it up because it's something that works for me. I used to trade everything on the one master.
Yeah.
There's so many amazing, juicy setups. I have to sort of diversify the psychology. Otherwise, it's just a mess. And it kind of feeds my inner gambling side of me.
Yeah.
If I know there's a setup coming, I'm taking it fearlessly, strictly on that account.
Yeah.
I'm starting to 8-star setup. That's on that account. It kind of just feeds everything. My fingers crossed. Okay. So yeah, that's what I normally do. Can you hear me?
Yeah. I feel like sometimes because I'm trading gold now as well as EU, and it's not like GU and EU where they're basically the same pair. The gold kind of very loosely follows the dollar, but still follows the dollar ultimately. Higher time frame macro view definitely still follows the dollar. But I'm thinking of maybe splitting them up, so having a gold account as a master and then
you should.
And then running other accounts off the back of it.
You should do that. Do one for this cable, do one for Euro, and then also have an account where when you enter it, it mirrors and it copies trades into both of them.
Yeah, exactly.
And it just helps with everything. You diversify the risk, you diversify the psychology, and there's times when one account will be in loss.
Yeah.
Because one account will be in profit.
Exactly.
One account. I mean, everyone's different. There's tons of traders that will just trade everything on one account. That's fine, but everyone's personality is different.
That's it. What it is. How are you anyway? You good? How was your week last week?
Trading wise, a bit ups and downs. Lots of annoying missed trades, a lot of losses, but 1 or 2 good winners that kind of kept me on board. That was my week, to be fair. But this week, it's news week. There's everything. There's FOMC, CPI. There's a bunch of news. So what I'm going to do is I'll look for a trade a few hours before the news. If not, around 20 minutes before the news. As I said, normally those are really, really good winners. So looking forward to that, to be fair. It should be a good week if I really just take my time with it. What have you got lined up? Can you show us? I honestly have no idea. Okay. So which is good. I'm going to show you one. Let me quickly cover my trades last week. Cool. I'll make it brief. How long have I got?
Morning, Coog. How you doing, buddy? Good to see you.
Yeah, I said, how's everyone doing? Amazing, yeah. Let me see.
How was everyone else's week last week? Were we in profit? Were we in loss? Were we at break even? It's really good to kind of get an idea from you guys as well. It's a shame we can't share kind of chart images in the chat, because then we could actually go through them and kind of analyze them. But I think what we might do at some point in the future is you might get one of you lucky viewers actually on the live with us, and
why not?
Kind of talk through your week. So if you are interested in that, reach out to us on Discord or on our Instagrams if you'd like to jump on and just get basically a free one-to-one with Diego and I. We can kind of critique your trade. There's nothing to be ashamed of. There's nothing to be embarrassed about when you're not profitable in trading. I think that's so much, like we discussed right at the start before Diego jumped on. That's what's so wrong sometimes with the trading world, is that people are so afraid to talk about the fact that they're struggling, or they're finding it difficult, or they're losing. And in fact, the traders that I teach that do the best are the ones that are most open and honest, the ones that I can actually sit down with and say, well, look, this is where you're going wrong. And there's nothing wrong with going wrong. You're not going to jump into this and get this right. So if any of you are interested in this, pop a message in the comments today. We'll reach out to you, or you can reach out to us privately, and we'll get you on one of the live streams, and we can kind of give you a bit of help and guidance. Diego and I effectively trade similar ways.
Very similar, to be fair, and there's also our points of interest are also very similar.
I think so. Yeah, that's definitely right. We might get into trades slightly differently, but ultimately what Diego and I are doing is very, very similar. So hopefully we can help you guys, and we'd love to get you guys on one of the live streams at some point in the future too.
Awesome. Yeah, that'd be great. Okay, so where do I start? Euro.
By the way, just sorry to interrupt you. Have you seen the dollar today?
No, but
It's off on one. It's literally gone mad.
Yeah, I heard it's broken out, which is oh my days. Hold on. Look at this. Let's see if there's a little rejection of this level, because my levels are quite accurate. You can see how it reacts over this indicator that I have here. I'm not sharing, but let's see if there's any reaction. Not that I'm gonna take a trade. I did plan to have an order here, but obviously because of the new pattern, I've deleted it a while ago. So now I'm expecting it to go a lot lower.
Okay, yeah.
Hold on. Okay, so this is basically gonna just keep on dropping, take that down. It's a bit obvious. But let's see if there's a nice little reaction. So if I were to sort of sculpt this, just for banks.
So what does that, I know you don't want to go into too much detail about it, what does that indicator tell you?
It just tells me previous historical, an area of time in the past, like there's been a reaction of it at some time in the past. But
like an area of sensitivity.
Yeah, exactly. And there's like a window to trade it in the past, but in the future you can also trade it, if that makes sense. But I obviously trade it with the boomerang. So if I look at this, for example, not that I will trade it, there's no confidence for me to buy it. So let's say add 2 pips. What's that? 1, 2 pips, 3, and then round it up. So yeah, again, this is not a trade, guys. It's not a signal. This is really how I'll be setting my trades. But obviously, let's see how it reacts with it. There's a lot of room to the downside. I might just smash through it, but this particular area was pretty damn accurate over here, especially if you've got like a 2 pip stop on both sides. I didn't really catch a trade here since I never had the confluences, but this is how the trade will look, more or less.
Yeah.
But anyway, that was not really a trade that I took. This was a trade that I took. It's just smashing through it. Is it smashing through it? I'm sure there'll be a reaction. If not, okay. There we go. But this is the beauty of having rules. You know, you need, this is not going to make sense if it's in the middle of the pattern, right? If that makes sense. At the time, the reason this one probably played out, I don't really see why it's not really a trade that I'll take. But these areas, the indicator that I have, I'll be looking for one below this pattern and below this particular low.
Yeah.
That is where you'll see a reaction. Okay. Right. So obviously, this is why I delete the order. So you need to know when to delete the order. Anyway, in terms of this trade here, this was this was a quick L, which is good. I like that. But at the time, I had the faker of this particular trend line. So obviously, I'm expecting it close back inside, and if I update, what did I have? Hold on. Maybe it was a larger. Yeah, I had this channel. I'm not sure if you guys can see it. 1, 2, 3, 4, 5, and I was anticipating at the time to take out this equity over here on the left. Hold on, let me just window there. Boom. So that was my target. My target at the time, as you can see, I was expecting this to go long. Conservative target approximately. So that was an L. Took an L there, which is all good. Put this on the aggressive account. It's not really a high probability point of interest.
Yeah.
Then I decided to take this long. This was also a loss. Same concept, but this time it was a bit of a larger pattern that I saw at the time. Oh, what was it now? Leave it. It's a larger pattern at the time. Bear in mind, I'm very, very aware that this is probably gonna keep dropping to the downside towards the trend line. Yeah. I'm fully aware of that. But this is why these are the kind of trades I'll take on one of the aggressive accounts where I catch pullbacks. Because I'm really good at catching pullbacks, even against the trend, which is fair enough. I took another L there. Obviously, at the time, we had this pattern in play, and I'm still anticipating this to get taken out. So that's obviously not manifested. So that was an L. This area here, it looks like I've managed to take a win here. It's more like a break and retest of this point of interest. Quick little 4R, so 2R losses. So I'm up 2R on that particular account. But now this is just noting it's targeted as low, as you know. Yeah. So see if I can catch a little counter trade pullback on one of the aggressive accounts at that point of interest, and I'm still applying the same thing. 1, 2, 3, 4, and boom around 5 for a pullback. Nice. Again, it's a bit of a counter trade, so not a trade I'll take from the conservative. So that was euro. Euro pound. This wasn't a loss. I'm over here. You can see there's this larger pattern here. Let me just draw it out for you guys. 1, 2, 3, 4, and 5. Let me just remove this over here, show you what I had at the time. Yeah. So I had a point of interest. If I show you what I saw at the time, where was it? It was approximately here. This is when I set the order. So obviously I'm expecting New York to liquidate London.
Yeah.
If I'm going too fast, somebody let me know. So I'm going to separate the patterns and focus on this point of interest. So again, 1, 2, 3, 4, and 5. This is another loss. Again, I had the indicator over here showing me there's going to be some form of a rejection. So I set the order, got triggered in. It reacted perfectly from the indicator.
Yeah,
however,
nice. Yeah.
Obviously I'm including spread. So 2 pips below, 2 pips above.
Yeah.
Did not bank any profit at all. So I'm expecting a trend line to break.
And where would you normally take your first profit off?
I normally take it off the nearest liquidity based on 4R.
Okay.
So this is more like I'll call it a bit of a, hold on, let's investigate, look. So I'll be looking at these areas of liquidity. Over here.
Yeah.
And over here. And I'll just go to the nearest one in confluence with 4R. Just because that's what my data gives me. So this is 1.6, doesn't make sense to me. 2.6 doesn't make sense to me. So basically down here, 2 bits above here.
Yeah.
This is the nearest one relevant to 4R, right?
Nice.
So that's where I would have just banked 100% or 90% and leave 10% running. The only time I'll leave 10% running is if I know there's going to be a gigantic drop, then I'll leave it. But most of the time I like just being out the trade. So
Yeah.
So I mixed it up. So this was a loss. I should have come out here. I don't know what happened to me. I need to journal my mind. I think it gets to the point. This is the thing with there's pros and cons with having different accounts. When you've got a conservative account and an aggressive account, multiple aggressive accounts, you kind of detach yourself a lot from trading. You detach yourself from money to the point where you don't really care about the loss.
Yeah.
I got to the point where I thought, you know what? I'm going to trust my setup because I believe in it. I'm confident in it. But then technically I should come out of the trade because one of my rules is that if there's a close back inside the trend line, it means that I need to update the patterns accordingly.
Right, okay.
So I broke my rule mainly because I was probably overconfident from a previous trade or whatever. Yeah. So this is my lesson. I should have just taken a little break, not even break even, a little 0.2R win here. Okay, I don't know why my thing keeps disconnecting. My wires I need to stretch or whatever. But anyway, should have taken profit, and there you go. So I got humbled there. But that never stopped me. I then set my order for this particular trade with a point of interest above this liquidity. Not sure if you can see it.
Yeah. And
this trade basically just missed my order, to be fair.
Oh no! What a wounder. Well, what day was that? Was that news event?
I have no idea. This is just Monday. This is this morning.
Monday. Oh, this is today.
Yeah, this is today. So yeah, I set my order and it just missed it. So I need to cancel it, to be fair. And it was based off the.
Yeah, it's like literally no news today either.
No, yeah, I think it's just lining up for all the news following this week, I guess.
Yeah.
It was based off the point of interest here, but It is what it is. So that's a missed trade. So I need to reevaluate. So it looks like, hold on. Looks like there's an updated pattern, and this is probably gonna just drop pretty hard. I'm gonna delete this and I'll reevaluate whatever. Dollar CAD. This was a missed trade as well. So I thought I got triggered in, but when I checked my accounts, none of them got triggered in. And I've got 8 accounts. Yeah, I literally did not get triggered in, even though it looks like I got triggered in. But I didn't. This was dollar CAD, 1 p.m. Thursday last week. So yeah, that was a bummer. And yeah, so did I get triggered in there? But now there's an update of the pattern, as you can see. Which means, because at the time of dollar CAD, when I set the order and I gave the signal to my community, gave them both, so obviously plan A, plan B, you kind of split it, you put in one prop firm, the other prop firm a little bit above, and just diversify it. And obviously when plan A didn't get triggered, then obviously you cancel plan B, because now if it does decide to go back up, it invalidates everything. Because now if I enter a trade, it's inside of the pattern. You know, we need to trade outside of the pattern, I guess, with this strategy. So I'll have to cancel that now. I've already cancelled it anyway. So now this was a missed trade, did not get triggered in. This I'm going to cancel, and even these orders here I'm going to have to cancel as well. So all of these orders that I've had here, I'll have to cancel until price is above the pattern. Yeah. Then I'll obviously reinvestigate and reevaluate. Oh look, perfect. It's gonna go above this level. Yeah. Great. So I'll look for a point of interest when we're down here. So yeah, that's dollar CAD. So it's gonna keep on climbing. You know what? In fact, we should really be looking for longs on dollar CAD. Yeah. If I can find a long.
Anything with dollar as the primary pair, the primary currency is long this week by the looks of it, and anything with dollar as the secondary pair is short. Yeah. I don't really see there'll be much change to that this week, unless the news really messes up. But you know, from the way it's looking at the moment, the dollar, you know, is looking pretty strong. You know, especially with the Trump and everything else that's been going on. It's, you know, the dollar's looking pretty strong at the moment. So I don't see any other way than that.
Yeah. I fully agree. So I have to see if we can squeeze in a long somewhere, but I can't seem to. I'm gonna have to wait for price to develop. The patterns are not that clear. But if I were to look for a point of interest, it'll have to be down here somewhere. Yeah. And just come out here. This is more of a Hollywood target. I'm not gonna hold you trade all the way there. It depends, but I'd rather just come out. So that's dollar CAD. Missed trade. This is actually a good trade that I'm in. So this one I'm still in. That's the only trade that I'm in at the moment. And I'll probably just come out manually, to be fair, just to lock in. Wait, this was a order. I'm gonna have to cancel this. I've missed this one. Yeah, I'll probably have to. Yeah, I'll come out manually. Why not?
It's not a bad result though.
Yeah. This is gonna give me some confidence, but I have to really write my confidence down. So obviously, when I start the week with confidence, I keep on taking winners. I might, you know, shift and be a little bit overconfident, but I'll never affect my conservative main master account. Yeah. That one I'm fully stripped. But when it comes to aggressive, I'm all over the place in a good technical, tactical way. Yeah. That makes sense. Makes sense. Yeah. This one I'm gonna close. Aside from that, should really, I'm just gonna close. Even though I know it's gonna come down, I just want to start the week in some good profit.
It's always good to start the week in blue, isn't it?
Yeah. And there's lots of room to the downside, to be fair. So much room to the downside. Again, same thing. 1, 2, 3, 4, 5. So this is gonna just, it's gonna drop quite hard soon. Most likely here, to be fair.
Nice.
So that's the target. That's where it's gonna go most likely. And that's it really. And then see dollar. I haven't really updated. Aha, there we go. Look, there's a fake out of your trend line. As anticipated, there we go. Perfect example. Right now, this is live. You've got 1, 2, and you've got your boomerang. This is a magnet towards this area. Surprise, surprise, there's liquidity here. This is no traffic, so this is just gonna slide right through and basically take out one of these highs before dropping to the downside. Sure, you've got the same, Chris.
Anyways, up.
Dollar.
So today, I think we're gonna talk about kind of risk management plans.
Yeah.
So risk management plans, the passive prop firm challenge, and I mentioned just before you jump on, I think really good for traders to make sure that they are setting realistic expectations, especially right at the start. I think most people that are asking these kind of questions, so what's the best risk management plan, they're quite early on in their journey. I think it's really, really important to acknowledge that you're probably at a point where you need to improve your baseline trading first and foremost. When you were looking at passive prop firm challenges yourself, was your trading strategy different to what it is now?
Yeah, it was, and it keeps on developing, to be fair. Every 3 months or every 6 months, there's a tiny little 1% tweak. Yeah, it's always evolving.
What were you aiming for, risk to reward, in the early days?
In the early days, DOT in the early days, I was aiming for probably 10R. To be fair,
were you?
But there was a lot of it was too much work ethic. I was hitting 10Rs probably 30% of the time, but the other 70% it was just break-evens, losses. Yeah, it just became a headache, and then started working on some other projects. So I just changed it and improved the win rate, because the win rate back then was probably 30, maybe around 30%, 40%.
Yeah.
And just changed it to less trades, higher win rate, and the risk reward. Then I dropped it towards 3 to 5R.
Yeah.
And then in the last sort of 3 to 6 months, I've maintained the risk reward now strictly to 4R, with the win rate varying between 50 to 70%, something like that on average. That's my sort of sweet spot. So I've sacrificed the risk reward for win rate, because I believe win rate is just better for a trader, to be fair.
Yeah, agreed. I think you've got to do the maths on it as well. And I think this is where your data comes in. Have you got any more to show on the chart, by the way, Diego?
No, I'm done. Just expecting dollars.
Yeah, I think this is where your win rate is really, really important, because I think your data is really, really important, because you need to really understand. I'm going through and doing some testing, so similar to you, I'm always kind of developing new strategies, finding different ways to take profits out of the marketplace. Right now I'm playing around with like a daily sweep strategy, where what happens after the daily level, as in a previous day's level has been swept. What happens? And what usually happens is there's some level of rejection, and I think what's really important is that you have the data to kind of give you that sheer confidence when you go into it. The risk management should come along with the data. I think I can show you. So and this is literally just something I was doing before we jumped on the chart. So this is something that I'm playing around with at the moment. And so far I've logged 11 trades. Out of those trades, we've had out of those trades, we've had 1, 2, 3, 4, 5, 6, 7 wins, 3 losses, and 1 break even. And what this information gives me is it gives me the ability to refine my strategy. So this strategy is based upon just literally getting into the marketplace after the daily high has been swept. And once the daily high has been swept, coming out of the marketplace with 1.3. So just to close below the level, and then coming out of the marketplace with 1.3. So every time that daily level is swept, and it closes back within, coming out the market takes 1.3. So what I can do with this information is, let's just say this was my selection of data. I know that I've got 1, 2, 3, 4, 5, 6, 7 wins. So I've got 7 wins. I've got 2 losses, and we've got one break even. Okay, so the total of all of those is 10. Okay, which then tells us that we've got a 70% win rate, a 20% loss rate, and a 10% break-even rate. Okay, so that then gives you the confidence to understand that actually 7 out of every 10 trades that you take, you're going to be making a win. But what's really important about this data is that you can then refine the strategy, because if you look at these numbers here, just zooming in on them. So I'm aiming for 1.3, but what I've done is I've recorded on every single one of them how far the trade ran to. So that one went to 1.92, 1.7, 1.45, 1.8, 1.6, 2.7, and 2.99. So now what I can do with that information is I can work out, well, actually, I can actually go for 1.45, therefore increasing my win rate, increasing my strike rate. Sorry, increasing my what's the word I'm looking for? Increasing my profit without actually having to change the strategy. But then you can play around with these numbers and think, well, what happens if I go for, say, 1.8? How often do I hit that? Well, I hit that once, twice, 3 times, 4 times. So 1.8 gives me a 40% win rate. And then, and the point is that you can use this data. You can use this data to really refine your strategy. And it's really important to understand your numbers. So I personally think if you're starting out and you want to know what risk management you should be going for, I think just get really good at getting a bit of profit out really regularly. So if you can get 1R out 70% of the time, you're probably still more profitable than most traders out there. And that's where so many traders go wrong, is they're going for, like Diego's a very talented and experienced trader who's mastered his skills over many, many years. In the early days, though, he would have probably been better, same as me, and I made the same mistakes, and I'm only speaking from experience. I would have definitely been better in the early days just going for 1R and just hitting 1R over and over and over again. And then when I get 1R over and over and over again, then let's see if I can get that to 2R over and over and over again. And that's how you refine. I think the problem is, and I think why so many traders fail, is they see me getting a 4 or 5R out of the markets and putting it on my Instagram. They see Diego getting your 4 or 5R out of your, and your students see that, and then they're aiming for the same results. But you forget that we've spent 8 to 10 years, if not longer, developing this skill set. So I think in the early days, you should be aiming for small wins, but really, really regular wins. Because if you aim for the big wins and you lose more regularly, you're probably going to find a lot more issues in your psychology. You're probably going to give up quicker. You're probably going to feel like it doesn't work. You're probably going to feel like you have something going against you every time you take a trade. Actually, if you go for 1R, or if you go for 1.5 or 2R, whatever it may be, you just try and do that more than 50% of the time, and you're winning really, really regularly, that really develops your skill, I think. And that's kind of how I started teaching my students now, is just to, look, guys, don't copy what I do yet. Get 1R out or get 2R out really, really regularly, and then go from there. Because look, if you can get 1.5R out 50% of the time, over 10 trades, you're profitable, right? And, it might take you a little bit longer, but you're going to pass your prop firm challenge eventually. And if you can get that 1.5R out 70% of the time, you're going to pass your prop firm challenge in like 15, 20 trades. It can be that easy. It can be that easy. And this is why I think so many people overcomplicate it all the time, and they try and shoot for these massive wins, and it's just so unnecessary. What do you find with your students in the early days? How do you coach them kind of the same as the way you do? Because you might have a completely different opinion to me.
When I coach them, I just told them to just follow the parameters that I personally trade at the current state. Obviously, I've done the hard work like yourself. The battle scars. There's no point me telling them to, play around with the risk reward to help with psychology. I just say, look, set the TP. This is what I do actually. I say, set the TP 100% at 4R. Just get used to that. Yeah. And then eventually you can aim for the Hollywood trades and maybe scale some out.
Yeah.
Then we'll reevaluate on their performance. If anything goes wrong, I'll just readjust it and be like, you know what, instead of 4R, just aim for 3R, just get used to that.
Yeah, exactly.
Keep it quite simple, to be fair.
Nice. And what would you say, you know, in order to pass your prop firm challenge, what would you say the best risk management plans are?
The best risk management plans, I would say, before you even attempt prop firm challenge, what I tell my one-to-one traders is get a demo first.
Yeah.
And with that particular demo, trade it as if it's a prop firm. And until you can see that you're actually seeing the numbers on a spreadsheet or on your journal and you're hitting 50, 60, 70% win rate, 3, 4, 5R on average, more or less, just do that for a few weeks and then you'll be ready. Well, once you see that you're ready, then enter on 2 different prop firms or split the risk on 1 prop firm with conservative trades and aggressive trades. Just to psychology a bit. So that's normally what I recommend.
Nice.
Yeah. How about yourself?
So again?
How about yourself?
Yeah. So I because I'm trading more kind of intraday. I'm going for, I get them to go for smaller profits. So your setups take a little while longer to kind of come about, don't they?
It does in a way, but it doesn't. So for example, there'll be a really good trade. Let's say one trade, there'll be 1, max 2 high probability trades per market, right? Okay. So if you're looking at Euro and you want all the rules to come in line, there might not be a trade for me until the 15th of August. Doesn't mean I'm not trading for 2 weeks. That means there might be another trade sort of forming right now this week. And let's say it's probably Euro pound. Maybe that's the high probability trade.
Yeah.
Right?
You're trading multiple pairs, aren't you?
Yeah. So every single pair, there's always a high probability.
Yeah, exactly.
Trade once or twice. When I mean high probability, I'm talking 80% and above. There's 1 or 2. Sometimes we miss it, sometimes we don't. But just having the options to wait for that high probability setup on different markets is going to stay. It's going to keep you away from waiting for 1 or 2 trades a month from the Euro.
Yeah,
but at the same time, there is literally an aggressive trade every single day.
Okay. Yeah.
So it's good to just have the aggressive trades, just so your trade and you're learning as well, and also the high probability ones. Obviously, if you're just trading 1 or 2 times a month, it's not enough. You're going to learn so slow, isn't it? So
yeah, exactly.
That's the
thing. So I'll tell you what would be quite good to do. So Joseph jumped in the comments and asked what about USD JPY. So I think what I'll do is I'll jump onto my screen. I'll show my analysis. Then Diego can jump on his screen and show his analysis. And then Joseph, you'll get an idea from both of us where we're kind of looking for it to go. I think we kind of covered it earlier a little bit, in that we are pretty confident that there's going to be length on bullish this week at least. But let's just go into the charts. Let's have a quick look and we'll go from there. The USD JPY isn't really a pair that I trade personally.
Yeah, I'll remove that one as well.
So let's see what we've got. So I'm first and foremost, the first thing that I'm always doing is I'm looking for where my liquidity points are. So the very, very bearish couple of weeks, we have a weekly low here. I'm going to make a note of, we got a weekly high here. And I'm going to be seeing those as my major points of liquidity for this week, because those are areas that could be swept, they could be pushed through, it doesn't really matter. Within that then, this is my kind of my weekly trading range now. I'm then looking for areas. So we've already had a daily sweep today, which is one of the things we discussed earlier, so we can mark that one on. We've got a daily high here. And the way that I like to trade is that typically once we start getting daily levels, so once we have a liquidity clearance, and what price has done over here is it's taken out all of this liquidity down here to the left, which are all these daily levels that were taken out last week. Some of them quite significant levels, as you can see. And we've now started creating a rejection. And this is the daily time frame. We've got lots of imbalance sat above here. So it makes sense with, 1, 2, 3, 4 candles rejecting this level. It makes sense that we're likely to push higher. We've also internally, we've had this break structure. So within this overall, so this would be my higher time frame range that I'm trading within. So I've got this high to this low, okay? I'm in the discount area of this low, and therefore I'm expecting price to push up. And my narrative now is that we've taken out liquidity levels to the left, quite significant liquidity levels. We've then created, we've already taken out that liquidity level here as well, which was last Friday's, I think, daily level. Yeah, Friday's daily level, that's been taken out and rejected really, really nicely. So it makes sense now for there to be a bullish push. The only hesitation I have with that, we've tagged into that imbalance as well. The only hesitation I have with that is we don't actually know this is bullish until one of two things happen. We either get what we call a complex reversal, which is where we come back and we take out that level here. That for me is a bullish signal. So if we get a sweep of this weekly level, so down to here, we get that level swept, and then we create some sort of rejection pattern, okay, that for me is a bullish signal, and I would take that trade all day long. Okay, it's the initial fake breaker structure which has come back and then been swept once again. That for me is my favorite bullish signal. The only other option that we have as a bullish signal is that we just create a second break, okay, and that then gives us our confirmation, because right now there's no indication. This could just be what we call a fake break structure, which is just setting price up to push down lower. And the fact that it's the start of the week, that could actually be quite probable. I'm not saying the rest of the week won't be bullish, but right now we don't have absolute confidence that this is going to go higher until that daily level there has been taken out. And once that daily level there has been taken out, we've got confirmation, that we're going to be going long. And if I look at this range here, this is my internal range. Right now, everything is pushing towards bullish on the the lower time frame. So I don't think there's a setup here. There was a setup there this morning. You had that sweep of the daily liquidity, and you could be riding that up now. So if you're not in the long on USD JPY right now, personally, I wouldn't be taking anything off this. It's far too high up in this range. So this range here, which is our initial bullish range, is far too high up in this range for me to be looking to enter that. For me now, I need either a pullback and then I can get into it, or I need a new range created. That new range, then I can then look again at a pullback down into here, and then I can take a buy from here. And what you might then get when that happens is you might also get a sell from one of these levels up here. So right now, for me, Joseph, USD JPY, there's nothing on it of interest. There's definitely a huge potential on it this week. But for me, I'm just sitting on my hands for now. If I was looking to take a trade off this, I would say, unfortunately, you've probably missed it for the day. The only other thing that you could do is you could try and catch the swing. If you really want to get into it, you could try and catch the swing. You'd have to do like a 270 pip stop loss. It's not great risk to reward. It would take a long time for that to play out. So yeah, I think it's kind of a bit stuck at the moment, USD JPY where it is right now. What happens over today and tomorrow will probably give you a signal. If you can come down into this section down here, into this discount level, especially if you get a sweep, that'd be a great place to buy from. And equally, if you get a new range created like that and you can come back into this discount level, then that would also be a good place to buy from. But for me, it only looks like buys. The sell bias would be if we did just do that and then we get a sell from there. So that is also an option. If we do continue to push higher, but we don't create a new range and we just simply reject that daily level, then that's a beautiful trade. You could take a sell from there all day long, because technically this market right now is still bearish. This is still a bearish market. I don't see any bullish momentum other than this initial push. And one push for me is just the liquidity clearance. That is not confirmation of change of trend. I need to see a change of trend like that for me to really get involved in it. And that's kind of what I'd be saying on it.
Fair enough.
Diego?
Yeah, I've got something similar. Let me share my screen real quick.
You're in.
Oh, sweet. That's fine. Thanks. Okay, so at the moment we are inside of a Elliott wave 3, so it's bearish essentially. Plus, there's been a sell side liquidity, as you can see.
Yeah.
By the way, this is in the past, right?
Okay, I was going to say. Yeah.
Yeah. So, because there's a sell side liquidity, there's a good chance it's going to target this particular area, right? Sell side, buy side, liquidation, blah blah blah. So, if we go to the current market, you can see it's missed that liquidity by a little bit. Can you see?
Mm-hmm.
Meaning that's a good target. Now, yes, I mean I'm short term. I'm bullish, and I don't really have a bias on dollar yen. To be fair, on the DXY, I'm actually bearish, but I know there's a bullish pullback happening. So I am bearish, but there's a bullish pullback, and that bullish pullback, you can see it on all the dominating dollar pairs. This is the H4.
Yeah.
So we've got 1, 2, 3, 4, 5. So at the moment, yeah, we're bullish, and I'm expecting this move at the moment with dollar yen to take out this liquidity. But unfortunately, this is inside the pattern, so I'm not going to use that. If I were to trade dollar yen, I'll be looking at this area of liquidity. So bullish on dollar yen for now, short term. But overall, if I zoom out to the H4, you can see it's about to break this trend line. And as you know, when there's a trend line break, especially of the third tap, such as this, 1, 2, 3, the third tap is normally a fake out. So that's what I'm expecting. And if I were to sort of clone this essentially from here, hold on. You can see that by the time it does come here, and we do get that short, wherever it is, just imagine it's here, for example, we'll be targeting this low. And at the moment, short term, there is currently a long. So, I mean, if you were to take a buy here and just aim for this area, you're going to get a nice 2.6R, which is cool. But like Chris said, we missed the trade. The best trade was actually here somewhere.
Yeah.
To be fair. So that's what I'll be expecting. You can see there's a larger potential pattern forming there for now, and we'll be looking at this area of liquidity, but most importantly probably the one outside the pattern. So most likely this one or even this one, but again, this is following the trend of the current pattern. So I'll be looking for shorts, makes sense, but currently there's a pullback and we are essentially bullish. So that's what I've got in terms of Elliott waves. You can see 1, 2, 3, 1, 4, 5, and there we go. So that's it.
Is that the 4 hour time frame you're on as well?
That was a H4,
yeah.
Now in terms of, I mean, if I were to look for a trade right now as a day trade, the best trade was obviously Asia, right? Taking out London.
Yeah.
There was a trade there. Confirmation trade over here as well, if you missed that. But obviously, I don't really trade dollar yen at the moment. That would have been a good trade on a break and retest. You can see there's a break structure here. And on the M5, right there, one of interest here. That sort of trade. So this is a trade we should really be on right now.
Yeah.
And we should be targeting that area. But this is a Hollywood entry, right? Obviously, personally for me, I'll be targeting 4R, the nearest V, the nearest where we are. It'll be this one here. I should be out of trade if I were to take it. And this one will be too far out. So then that's 5.2. The nearest one to 4R was obviously this one, I believe. Yeah, 3.5R. I should really be out this trade if I were to take it. But right now, looks bullish. It's bullish right now. So we are bullish, but it's not with the trend. That's one. So I definitely agree with you.
Yeah, exactly.
We are essentially. I'm trying to see if maybe there's no. I'll just leave it like that, to be fair. And then And yes, some shorts will be probably most likely somewhere approximately down here.
Yeah.
Somewhere down here. Or you can have a nice wide stop if you want to be a swing trader and have a really wide stop. Most likely you are going to do that, which is good. I do that as well with a swing account. I just have a wide stop. And then just aim for these areas of liquidity. So yeah, that's my point of view. Bullish and then bearish.
Nice.
So cool.
Oh, I think that's pretty much done for today, isn't it?
Yeah. Good session.
Yeah, good session today. Thanks for those of you who joined us. Those of you who are regulars, have your questions ready for next week as well. And again, if you want to reach out to us, ask any questions during the week, then please do feel free to do so. We are looking for some guests to jump on with us as well. So if you'd be interested in jumping on and going through some trades and getting some kind of personal one-on-one coaching from both of us, we're more than happy to help you. So just let us know. Jump onto our Instagrams, pop us a message, and if we don't see you before, we'll see you on next week. Yeah, sweet. And if you guys are not part of the Discord community, you can reach us on the Discord. I'm going to post the Discord to the CTI Discord. Yeah, so you can just join there and just message Chris and myself if you have any questions, etc. And there we go. Nice. All right. Well, cheers, guys. See you all soon. Sweet. Nice and Chris. Take care, man. Yeah. All right. So